But we don't make any money by spreading fear. But we do want you to be careful, make up your own mind. And what's that old song? Don't worry, be happy.
More banks are going to fail. Whoa, would you believe that? Well, that's just a prediction, but who knows? If you've been keeping up with the news, you might have heard about the troubles many banks encounter these days. And it's a lot more severe than you think. Let's talk more about it. Right now, in the realm of finance, leaked reports suggest that some banks are in danger of failing, and this has caused a lot of concern. It has been making waves lately. The growing concerns surrounding the banking industry and the potential for a looming financial crisis.
Silicon Valley Bank losses and so on, and the banking system's losses are largely due, including the central bank's losses, the Federal Reserve's losses, are largely due to holding bonds that are gone down in value, therefore lost money, and funding it with an interest rate that's too high.
What's more interesting about it is that it gained the attention of renowned investor Robert Kiyosaki. By the way, have you seen his tweet before? It says, "Giant crash coming. Depression is possible. Fed forced to print billions in fake money. By 2025, gold will be at $5,000, silver at $500, and Bitcoin at $500,000. Why? Because faith in the US dollar, fake money, will be destroyed. Gold and silver, God's money. Bitcoin, people's money. Take care." Some people are intrigued by this tweet, saying, "All you do is forecast doom. Dollar milkshake theory in your face." Someone even said, "If you are right, I buy my third house, silver gains." Diversify, people. Giant crash coming? There is no need for such a prediction. It's a guarantee. It's just a matter of when. Market flows in cycles. In the meantime, just trade when the market presents. Your prediction may garner a little more weight if you put a timestamp on it. Could these numbers really happen? We've known Robert Kiyosaki for his predictions in the industry, but he garnered both followers of believers and unbelievers alike. You see, he has been a central figure in the world of personal finance and investment for years, and his views on money, wealth creation, and the role of banks have sparked both intrigue and controversy, causing all these chit-chats. Kiyosaki's stance doesn't merely echo doom and gloom. Instead, he sees this situation as an opportunity for investors and individuals to reassess their financial strategies. Robert Kiyosaki frequently says, "Savers are losers, and I recommend people to save gold and silver and invest in real assets like real estate."
They're still saying things like savers are losers. Your house is not an asset. And the biggest bank of all today is BlackRock, and they're as woke as they come. You know, they're as greeny. They're canceling oil projects all across the world because when they cancel an oil project, inflation goes up because the price of oil goes up.
He's telling us to focus on real estate investments instead of depositing in banks. He also suggests that this is the best time to buy Bitcoin. People will dive into that, especially those who want to follow his tracks. His followers believe in him, and the more he speaks, the more people are invested. That statement stirred up some debate online, especially in his stance on traditional banking practices. Kiyosaki's perspective on banks goes beyond just the idea of saving. In his book Rich Dad, Poor Dad, he emphasizes the importance of financial education and criticizes the lack of it in traditional schooling. He believes that banks primarily benefit from the lack of financial literacy among the general population. If so, people who need to learn how to handle their money tend to rely on their banks to manage their finances. Robert Kiyosaki has been educating millions of people worldwide about the hidden tricks of the financial system. In alignment with his belief, understanding the banking scam is crucial if we want to break free from the cycle of financial struggle. He even said that banks use people's ignorance of cash and investments to their advantage. How is that so? There's also this quote from him saying, "Banks run the world. The rich run the world." He explained, "They tell you to save money," referring to banks, "so they can lend out your money 10 times. So your dollar became worthless 10 times over." Robert Kiyosaki emphasized that the purpose of banks is for our money to flow through them. He said banks used to pay 10% interest on the money, but now it is reduced to 1%. However, banks lend it 10 times, so that's why he advises everyone not to save money, and from a direct quote, he says, "The money became worth less and less and less and less and less, while the banks are getting richer and richer. Considering the taxes, we must pay that 1% interest." That makes sense though. If you think the purpose of banking is just like having a giant piggy bank in the city, or having a vault inside an extensive infrastructure where you feel you're just storing all your money, then you're wrong. Why would they build banks? Why would they lend you money? Think about it. Technically, they're making money out of our money because they use our money. That is to gain more profit because that's the goal of their business. They get money from your deposits, pay you an interest, and then lend it to someone else.
Example, a commercial bank will sell their bonds back to the Federal Reserve and they get cash. Now that cash, they have two things they can do with it. The first is to lend it into existence. So the Fed pushes buttons, creates money, and gives the banks the money to buy the bonds. Now, if those banks want to lend it into existence, like on a credit card paying 18%, or a home equity loan paying 8 or 9%, or a mortgage or a car payment, then they do that. And now that's how money is created.
The difference between the two interests makes the profit. Now, if I borrow money, guess what? Do I pay taxes on debt? Robert Kiyosaki questioned. In fact, there are no taxes on debt because it is debt. Robert Kiyosaki teaches us how to leverage our money tax-free to acquire income-producing assets. By doing so, we can escape from the clutches of the banking scam and start building true wealth. Perhaps we shouldn't entirely rely on banks, but it's vital to understand their workings to make intelligent choices about managing our finances. Know that there are other purposes of banks. It has many cycles and cash flow aside from receiving and lending money. They provide a safe place for people to store cash money, facilitate transactions, and offer loans to stimulate economic growth. Now, let's talk about business buildings and shops up to the main problem. Have you seen those empty offices and stores with nobody around? Banks invested heavily in these places, and they're beginning to face the results. The prices of these business properties are dropping a lot, and because it's becoming more challenging to borrow money, banks are having a tough time selling these properties. The credit card and auto loan delinquencies are going up, and that's not good for consumers and banks. This information comes from a report by the Federal Deposit Insurance Corporation. As more people struggle to make payments, banks must set aside more money as reserves, which means less lending and less money circulating in the economy. And guess what? That's not great news for retail sales either. When delinquency rates, which indicate missed payments or financial struggles, increase, it often decreases retail sales growth. As the former rises, the latter falls, leading to a chain reaction that could hurt businesses. It triggers a sequence of events potentially leading to layoffs, reduced profits, and general economic slowdown. The situation is concerning, with more than a third of Americans inquiring about personal loans for various purchases. In a fascinating discovery from a survey by Forbes Advisor, it's revealed that a significant 68% of Americans have taken the step of applying for a personal loan within the last 12 months. These unsecured loans rely solely on borrowers' ability to repay, often tied to their wages.
They will pile that money into the reverse repo market, which is overnight lending. They give it back to the Fed, earning 4% with safety, instead of lending it out into the system. As I mentioned to you, it is an indictment of the economy because they would rather give it to the Fed at 4% and not lend it out than to give it to someone on a credit card payment earning 4.5 times that at 18% because they don't trust the economy.
But what happens when unemployment rates go up? Well, defaults increase, banks must set aside more reserves, and lending tightens even further. It's a vicious cycle that's difficult to escape. And if that wasn't enough, we've witnessed some recent bank failures that have amplified concerns about the stability of financial institutions. A domino effect of significant banks collapsing has unleashed a wave of uncertainty and concern. The events began with Silicon Valley Bank, Silvergate Bank, and Signature Bank faltering quickly during March. The aftermath of these crashes reverberated through the entire economy, leaving a substantial impact in their wake. Then, First Republic Bank started to go down, and the government had to help other banks with money to avoid even more problems. This made many people leave, and now everyone's still determining what will come next. In response to the decline of the former banks, Kiyosaki advised that they invest in gold, silver, and Bitcoin BTC as a safeguard strategy for the constant transition of capitalism. But what's worse, Kiyosaki alerts the public about the state of mortgage companies. He goes as far as indicating that even the mortgage giant Loan Depot is facing significant challenges. Robert strongly advises his followers to exercise caution and maintain a healthy skepticism towards statements from President Biden, Fed Chairman Powell, and Treasury Secretary Yellen. Here's his tweet. More banks about to fail. Rumor is mortgage giant Loan Depot is on the ropes. Regional banks and mortgage companies are falling. Please be careful. I would not believe anything President Biden, Fed Chairman Powell, or Secretary Treasury Yellen say. Think for yourself.
Janet Yellen, the Secretary of Treasury Secretary, used to be head of the Fed, and today she's head of the Treasury. And the collusion is they give that money back and forth to each other, and you and I get nothing.
The banking crisis still has a long way to go before it's resolved. Kiyosaki's cautionary message urges us to brace ourselves and prepare against the imminent conclusion of capitalism. There's unrest in the industry, which may lead to more housing crises like the one we experienced in 2008. This scenario might evoke memories of the global financial crisis that year when several banks failed, and how Kiyosaki predicted this failure years before, showcasing his keen understanding of these complex economic dynamics. In 2008, banks and financial institutions used risky methods like giving loans to people who might not be able to afford them, creating complex financial products for mortgages, and borrowing too much money. Their securitization process led to massive losses for Wall Street banks. Financial tricks like these contributed to the downfall of many banks, leading to their collapse. As a result, Robert Kiyosaki's predictions of more banks likely to fail are becoming a harsh reality. It implies that the banking industry's health is independent of race, but of poor decision-making. Sadly, some people's lives can be shattered by banking giants' mishandling. So, what will be the fate of banks? Since 2000, there has 553 bank failures in the US, and based on the Social Science Research Network study, close to 200 banks are expected to fail by the time this crisis is over. People who don't repay loans are a big reason why banks might fail, because banks must set aside extra money. This can slow down the economy. The question is, can the economy bounce back from this? Well, the signs aren't promising. With so many interconnected problems, from real estate to lending standards, it's unlikely that we'll see a significant rebound. Economic growth could be stunted, leading to bank failures and economic downturns. Now, here comes the most critical part. Could this be the final warning before we experience the biggest crash since the 2008 financial crisis? We could be facing an economic disaster and recession that will affect all of us. We cannot take this lightly and must start paying attention. Kiyosaki's prediction and warning about these failing banks are essential. We need to take action, and we need to do something about it now. The signs are undoubtedly worrisome, but as Robert Kiyosaki suggests, being informed and proactive can make all the difference. Here's what we can do. 1. Emergency fund. Prepare an emergency fund and build a savings cushion of 3 to 6 months' expenses. 2. Debt reduction. Minimize high-interest debt to enhance financial flexibility. 3. Budgeting. Create and stick to a budget to track spending and cut unnecessary costs. 4. Diversify investments. Spread investments to reduce risk and avoid concentration in one area. 5. Continuous learning. Stay informed, update skills, and seek professional financial advice. Remember, the biggest crash could be near, and we should do everything possible to protect ourselves and our families. If you want to know more about finance, investments, and money, just hit that like button and subscribe. And remember, stay informed, stay prepared, and we'll catch you in the next video. Have a great life.